All right, folks, this is a video for those of you that are starting the Trade Live with Scott program. Yeah, that's the name I came up with. I was going to call it the Mega Special Amazing Wonderful Trading System, but instead, we're just going to call it the Trade Live with Scott program because that's all we're doing. We're just going to trade live side by side with each other. And so today is Sunday, October the 4th. Tomorrow morning, Monday the 5th, is going to be our unofficial beta kickoff of this. And so I just wanted to go through some rules and some just housekeeping items as we get started in this process. Number one is the timeline for our ramp up from beta to just full stream and kind of what that looks like. And then wanted to talk about some of the infrastructure and tools that we're going to be using for taking payments, tracking results, communicating with each other, all of that. Want to talk about some of the trading rules. This is not comprehensive by any stretch of the imagination, but I wanted to touch on some of the key components of the trading rules to this approach that are so critical. Some things to think about. Man, I just had an exchange with someone on YouTube. I've probably had a half a dozen of these since we put this idea together of trading live with me, and every one of them said the same thing. I've done this on my own, or I've done this with someone else, and man, it was awesome until it wasn't. And then one bad trade, and I absolutely blew everything up. And I think you guys get that, especially in trading in general, but especially with this system, this approach of 0-day trading, that the profit is not the issue. The profit is not the problem. There is plenty of profit in these trades. It's the risk management part. All this comes down to, guys, is managing risk appropriately. That's it. Profits will take care of themselves. We can lose, and we're going to talk about this in a minute, we can lose 3 out of 4 trades. We can lose 3 out of 4 trades and still be nicely profitable if we manage the risk right. So we want to talk about some of the trading rules. We need to talk about the best trading vehicle, whether that is the SPX or the futures. And unfortunately, I think I'm going to start trading the futures. And we'll talk about that, why that is. And then last but not least is our group size and what number we want to hold this to and why, and why that is so important. So let's talk about the timeline first of all. So the first day is going to be tomorrow. That's on Monday. And so this is going to be our first week out of the gate. This is our beta test here. Monday, Wednesday, and Friday of this week. I'm going to post up my live trades on the Discord live chat room. Okay, so in our chat room on Monday, on Wednesday, and Friday, I'm going to post up my my live trades. That's pretty much going to be the interaction for this week. We're not going to use Zoom this week yet. I'm still working out a couple of bugs there on that, and I want to make sure that it's just not an absolute mess when we roll that out. So I will be posting up my trades live on Monday, Wednesday, and Friday this week. Now, one of the things for this first couple of weeks as we get started, I am not going to do a Tuesday and Thursday bonus trade when we are in beta here. As you know, these 0-day expiration trades are Mondays, Wednesdays, and Fridays. So what do we do on Tuesdays and Thursdays? Well, usually I have a 2 or a 3 or maybe a 4-day trade that we can do in an equity that I will throw out to you on a Tuesday or on a Thursday. Guys, just for simplicity's sake here as we're getting up and running in the beta, I'm going to forego those here. The bulk of our profit is going to come, or our potential profit at least, is going to come from our 0-day expiration trades. So I'm going to forego those Tuesday and Thursday trades. But we will be doing, obviously, our Monday, Wednesdays, and Fridays. I'm going to put those into Discord's live chat. All my trades are still going to be recorded and posted to the YouTube channel after the trading day. So from a historical standpoint, I will still go ahead and record my trading day. So that's something that I'm needing to work out here. I've got 4 different computers, and let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9. 4 different computers and 9 monitors is what I trade off of here in my trading office. And so I'm going to have one computer that I am just recording my trades on throughout the day. And I'll post that video up postscript in the YouTube channel after the fact, obviously. And then I will have the Zoom running on my account screen on another computer that you can see my activity page and what's happening with those trades. But for right now, for this first beta test right out of the book, no Zoom. I'm just going to be posting them live in Discord, okay? The following week, so we're planning on going live with this on the 12th of October. I believe that is a Monday, the 12th of October, so not this week, but next week. And we'll set up payment options through Discord. So I'm going to have a payment window open up on Friday the 9th through the 11th. So Friday, Saturday, and Sunday there will give you an opportunity to officially sign up for this. And we'll talk about what that means in terms of group size here in just a second, okay? Infrastructure. So what are we using for tools and so forth here? It looks like Discord is a pretty good place. So I think the chat room works well. We're going to use that for the live chat. I will place my trades in the trade input channel. So you'll see now that we have two channels up there. We've got the main one, which is just for discussions and chat. And then we've got the other one there called trade inputs, which is going to be just my timestamps, just the trades themselves, okay? We're going to be using Zoom for a screen view. And I'm trying to think about, again, I would appreciate your guys' input on this. I'm trying to think about the best way to show my screen on Zoom. So a couple of things here. Number one, I was thinking initially it would be nice to be able to chat and talk, but I'm going to mute my mic on Zoom because number one, I've got other things going on throughout the trading day. I'm on the phone or I'm talking to somebody or I'm recording another trade for another program of some kind. And so I can't really have the audio on during that time frame. The Zoom will be primarily to show my screen and what I'm doing. And I think what I'm going to do is I will alter the screen to my position if we have a position on and I'm adjusting it. But for the majority of the day, I think I'm just going to leave my screenshot on my execution page so that just at a quick glance anytime, you can see every trade that I have made that day and the current trades that I am in. I think that will probably be, I was thinking, well, do I show a risk graph? Do I show the current positions? What do I show? I think if I've got the execution page up there, that gives you all of the data that you need to be able to say, hey, where is Scott right now and what is he doing? So I'm probably going to leave it on my execution page, my order page, if you will, with no sound running. Now, one other thing I will quickly tell you again, guys, and I warned you right up front about this, right? There will be some days in this program where there's no Zoom. That's how it's going to be because I've got, when I go to a race, I leave on a Wednesday, and I'm pretty much out in a field with very little internet most of the time. Certainly, I don't have the time to sit in front of my computer all day long with the Zoom. So again, it'll just be timestamps inside of Discord. I'll still be trading, but what you will find, generally speaking, when I am not able to sit in front of my computer all day long, a lot of times those days of 0-day expiration trading, it's a one-leg trade. So if the market is really strong that morning, I'll only put in the put leg. If the market's really weak that morning, I'll only put in the call leg. And they're really far away. So they don't require a lot of management. It's something that you or I just need to look at maybe every hour or so. So just be aware that there will be some days maybe where we don't have a Zoom lead coming into it, okay? Facebook group. The Facebook group is going to be used primarily for announcements. So when I need to make an announcement of some kind, so for example here with this video that I'm making, I'll make an announcement in the Facebook group and put a link to the video. So it's primarily going to be used for announcements and sharing files. I'm going to put some trading rules that are a little bit more specific and detailed together for you guys. put them together in a file format, a PDF format for you guys. That's a great place to go to get those. And it's also where I will, going forward, start leaving you guys links to YouTube videos that I am making just for this private group. So they will be unpublished links that I will put inside of that group so that the public can't see what it is that we're doing or talking about, okay? So that'll be going forward, but we will be using the Facebook group, but that's primarily what it's going to be used for. I'm not going to be putting timestamps inside of the Facebook group with posts, okay? I mentioned Discord for payments. We will be using Discord for the payments. I'm going to open that payment window up on the 9th through the 11th, and we'll talk about that here in just a second, how that's going to affect our overall group size, but I think it will definitely diminish it, okay? Trading rules. Let's talk about some trading rules. So, guys, risk management. Risk management is the key in this process. Profits in this program take care of themselves. The profits in these trades are so huge, they are so enormous that if you hit it right, no one in this program, no one that has ever traded zero-date expiration trades has ever said, you know what, I quit doing those because the profit wasn't good enough. The profit is crazy big potential-wise, right? That's not the issue. The issue is risk. The issue is risk. We have to manage risk. And guys, I have a mantra with this particular trading style. Take lots of losses often. Repeat that mantra to yourself every day that you trade this system. Take lots of losses often. Now, if you're taking lots of losses, if you're taking losses all the time, usually what that means is they're very small losses, okay? One big loss in this program can wipe you out. So we're going to take lots of losses. We will take losses in this program very often, okay? And the reason why is, guys, you see the normal rule that I follow is a 3-to-1 risk management model. I'm going to, if I have a credit of $1,000, I'm going to risk $3,000 in that trade. Most of you have seen, if you haven't, go back and look at it in the archives, that video that I did a couple Fridays ago where I hit a max loss and I lost $5,400 on the day. To me, that wasn't a big deal because I had the dry powder and I knew the results of the system. And I knew that over the subsequent few trading days, I would have a really good chance of making that back up. And I did. I brought in, I think Monday, Tuesday, and Wednesday of that next week, I brought in over $10,000, right? So I more than made up for that. Here's the problem with that. What if you're trading a teeny tiny account? You cannot afford to risk 3 times your credit, because if it wipes out 40 or 50% of your account, guess what? You're done. It's going to be a really, really long climb back up to break even, right? So guys, listen, brace for yourself right now. We're going to take losses, and we're going to take a lot of them, and we're going to take them often because they're going to be small. We're not going to risk the farm on this program, okay? Here's the deal, and here's why I say this. Our goal with this program is to make like 5% a week, okay? That's our goal. If we look at this, 5% a week. I want to show you something here. Let's compound. Let's look at this. Let's say that we're starting with 25. I'm going to blow this up a little bit here. Let's say that we're starting with $25,000, okay? And our goal is to make 5% a week. Guys, what are we talking about? 1 to 2% a day. That's our goal, guys. 1% a day on a zero-date expiration trade, I'm thrilled. 1% a day. 1 to 2% a day gives us our 5% a week, right? 5% a week, it's 20% a month. That's 240% a year. Let's say that you can do that consistently for 3 years with a $25,000 account. Yeah, that's $1 million. That's $1 million. You turn 25 grand into $1 million in 3 years. So you know what? 1 or 2% a day is plenty. It's more than we ever need to make, guys. It really is absolutely enough to get us to where we want to be. So it's okay if we take losses and we can still come out a little bit ahead just each and every day, okay? But 5% a week, guys, that's what we're shooting for. And the reason that I bring this up is one of the things that you need to know about yourself as a trader. And if you've been trading at all for any time now, you probably know the answer to this. And the question is, what drives you? Is it fear or greed? Okay. Now, there are people that are driven by fear. They are more concerned about losing $1,000 than they are excited about making $1,000. Okay. They're driven by fear. And I think you guys are a bunch of risk takers, because I have not seen that demonstrated in a lot of the conversations that I've had with a lot of you. There was one exception to this, and it was a person that said, oh no, he saw the Trade Live with Scott program video, and he's like, I knew it. I knew all good things would come to an end, and now you're not going to do any more free YouTube videos, and this is going to be a paid service, and I'm not going to be able to learn from it anymore. And I said, no. I'm going to keep, in fact, I'm going to probably put up more videos than ever before on the free YouTube channel. And if that's what your goal is just education and looking at things historically, then you're going to be fine. But you understand that what we're talking about here is actually going out and making money. Instead of looking at my trade videos historically and going, oh, that was cool, how about we do it together and you participate in that same profit potential, right? But he had his mindset was that of fear. He's going to watch these videos until the end of time, but he's never going to put any of his hard-earned money on the line, okay? There's nothing wrong with that. Everybody's driven by different impulses. I am not driven by fear. I'm driven by greed. And let me tell you how greed affects my trading in 0-day to expiration trades. I'll do a trade where the wings are far enough out, and I will look at it. Well, let's say that let's put a perfect scenario together. Market's trending up, right? So I get into my first trade and I put in the put leg, and I put it at the right level, and it says, well, if you put it here, you could make $800 on the day, which is wonderful, right? But then if I move it up just a little bit, it goes to 1,800. Now, I didn't go to math college, but you guys will all agree with me that 1,800 is better than 800, right? Probably shouldn't do it. It breaks the rules. It increases the risk. But in my mind, 1,800 is better than 800, right? So you do things like that. The market's really trending now, and you probably should hold off on putting that other leg in to wait for a market pullback. But I don't want time to go by, so I go ahead and throw it in early, right? Because you're greedy, because you want that extra premium. So you have to know yourself and know what drives you. But the thing that I would tell you guys with this trading system is don't get myopic. Do not get short-sighted and get myopic with this. I've seen this myself in programs that I have been a part of and paid money for. I've seen it so many times with subscribers to programs where you get incredibly impatient. And it typically happens when service will come out and say, hey, you know what? We had a regularly scheduled trade due for today, but because of market conditions, we're not going to issue a trade recommendation today. Oh my gosh, people freak out. I've paid money for this service. I demand a trade today. You owe me a trade, right? Because we've paid money for the service and we feel like we're not getting value. Guys, I can't stress this enough. Sometimes the very best trade is no trade. Sometimes the very best trade is to do nothing, because that's just simply the marketplace you find yourself in that moment. So we will have days, I am sure, where we're just like, you know what? We might get into a trade later today, way later in the day, but right now, This is not a market we should be involved in. We are going to sit on our hands and guarantee ourselves no profit, but also guarantee ourselves no loss, right? So we've got to get patient with this, guys. You've got to be okay. You have to be okay doing a trade on Monday. We get knocked out for a little loss. Doing a trade on Wednesday, we get knocked out for a little loss. Doing a trade on Friday, and we make it all back plus a nice little profit. And at the end of the week, you'll look at it and you're like, yeah, that was a nicely profitable week. But most of that trading week, you were pissed off because you're just like, man, this is not going according to plan, right? So we have to be disciplined. We have to be able to be willing to take lots of losses. I should add it to that, take lots of small losses and do it often, okay? Being disciplined. Don't get myopic. Manage our patience for those no trade days and the days where we get losses. Okay, another thing that I did already mention, but I want to hit again, is position sizing. Position sizing. Guys, do not. One of the great things about this system is that if you do a one contract trade on the SPX or you do a one contract trade on the E-mini futures, you don't need a whole lot of cash, right? Like this is not a trading system where you're like, well, if you don't have $1 million, you can't trade it. So you don't need a lot of cash to get into this system, but you want to make sure that you're position sized, guys. You've got to be able to do a couple of these trades, book a small loss, and have the dry powder to be able to come in and hit it hard the third time and make it all back up, right? More importantly, guys, are adjustments. So you've seen my videos. You know that I do adjusting all the time. All the time. I will take a trade off at a small loss, readjust it in a new position. Well, a lot of times that's going to require adding capital to your trade. A trade that I start off one day with $4,000 or $5,000 in, I end up at the end of the day with $8,000 or $9,000 in, right? So you have to have that ability to scale. I'll do a trade with 2 contracts and it won't work, and I'll get out of it at a small loss, but I will reposition it in a better position, but with 6 contracts, right? Well, if you don't have that money to be able to go up in contract size, you can't adjust. Now, what do? Now you're just stuck with the loss, right? So guys, don't over position size. I would tell you don't use more than 10% of your account in any of these trades so that you always know that you've got dry powder to work with, okay? Rules again, guys. I open my first trade usually around the 8:30 Mountain Time, 8:30 a.m. Mountain Time. So that's the first hour of the trading day. Markets open up at 7:30 a.m. my time, Mountain Time, 9:30 a.m. Eastern Time. I let it trade for an hour. I let it find its footing, find its way, gain liquidity, tighten up spreads, get a directional bias. And then I put in the first leg at that 8:30 Mountain Time timestamp, okay? And I'm going to put the leg, I'm only generally going to put in one leg at that time. Now, the exception to this is if the market is flat. If the market is just flat on the day, I'll go ahead and put in both legs. But if the market is trending, as it has been pretty much every single day for who knows how long now, if the market's trending, I'm going to put in what I call the strong leg. So if the market's trending up, I put in the put leg. If the market's trending down, I put in the call leg. I put in whatever leg the market is moving away from, okay? So I'm going to do that at the first hour mark of the trading day, 8:30 a.m. Mountain Time and 10:30 a.m. Eastern Time, okay? 1 hour later, 9:30 a.m. Mountain Time, I'm going to look to put in the second leg. Now, that may happen, it may not. It depends, again, what the market's doing. We might have to wait a little bit to see if the market stops moving in that directional bias. But that's when we start looking at it, is at that hour, okay? So first hour into the trading day, I put the first leg in. Second hour of the trading day, I look to put the second leg in. We always exit these trades 30 minutes before the close. Guys, it's just too crazy. Right now, it is absolutely too crazy to be holding these things to the expiration at the end of the day, especially if we're trading the futures, okay? Absolutely if we're trading the futures. So we will exit these things at 1:30 or thereabouts Mountain Time, 1:30 p.m. Mountain Time, 3:30 p.m. Eastern Time. Okay, so those are some of the rules that you'll be looking for. So you want to kind of look for the time. If you don't, you're going to sit in front of your computer all day long, which I hope you're not. But if you want to look at the Zoom screen when the Zoom is up, or you want to look at the live chat room, those are the time frames to look at. Obviously, there's going to be times when we have to jump in and adjust something, but the standardized approach is going to be the first hour in, we do one trade, the second hour in, we do the next trade, half hour before the market closes, we get out of them, okay? So we talked about position sizing, making sure that you're using that so that you do have dry powder. Those are some of the trading rules that I wanted to go over with you. Let's talk about the best trading vehicle, and let's chat a little bit about the difference here between the SPX and the futures. Now, I've not in the chat room, we haven't even talked about this, guys. And we should have been discussing this over the last couple of days, but there's a challenge that we have here. There is a little bit more leverage in the futures, but also sometimes you're going to get worse fills, and trading the futures are way more expensive commission-wise, way more expensive than just trading the SPX, okay? And it also trades after the cash close. You got 15 minutes there for it to settle, which can be scary because you got to really make sure you're out of that trade before the cash markets close when you're trading the futures. However, the issue that we have is the pattern day trading rule, PDT rules, which basically state if you trade more than 3 day trades in a week, they're going to lock your account up. All you'll be able to do is close transactions. You won't be able to open new trades for 90 days if your account is below $25,000 in equity. Now, I know that a lot of you, I've talked to a lot of you that are below 25,000. And I certainly don't want that to preclude you or us from doing these trades together. So, because of that, I am going to trade, at least for right now, I'm going to trade the futures contracts. I'm going to trade the E-mini futures contracts, okay? Because there are 2 ways that you can avoid PDT rules. One is to have more than $25,000 in your account, and the other is to simply trade futures. There are no day trading rules. There's no pattern day trading rule that applies to futures. So I'm going to trade the E-mini futures. If you are in a position where you have more than $25,000 in your account, you're not subject to pattern day trading rules, I would highly recommend you trade the SPX instead of the E-mini futures, okay? I think you're going to get better fills. You're going to pay way less in commissions. I mean way less in commissions. So if I had my druthers, I would trade the SPX 9 times out of 10. Now, I say that that's probably not accurate. It's probably more close to 7 out of 10 times I would trade the SPX, because I do like, on certain occasions, the ability to do trades Sunday evening when the futures markets open up, and I do like to be able to trade before the markets open and after the markets close. And of course, you can't do that with the SPX. So there are advantages to the futures contracts, but I just think all in all, you would be better off trading the SPX. So if I am trading the futures and you have the ability to trade the SPX, and you're like, well, how do I replicate what he's doing? Just look at the delta. Look at the delta that I am using on my trades, and you can replicate that exact same delta with the SPX. Okay, so you can replicate exactly what I'm doing with the E-mini futures on SPX, if that makes sense. Okay. Okay, group size. Let's talk about group size for just a second. Those of you that know me, there's a lot of you in here that are brand new to the YouTube channel. You've just run across this. You're like, I don't know who this guy is. I don't know what I'm getting myself into. But there are a lot of you that have known me for several years. And it's probably through one of my relationships with a publisher. So Agora Financial, which owns Paradigm Press, has a publishing contract with Jim Rickards, which is a brilliant, brilliant man. That guy has forgotten more about macroeconomics than I ever will know. And the incomparable Robert Kiyosaki. And both of those individuals I've had the pleasure of working with over time, putting their recommendations together for them and working with them. And we do that through Paradigm Press. And there's somewhere around 50, 60,000 of you that see those trading videos that I have been putting out over the last several years. And so that's how you know me, okay? So I want to give that background if you don't know me, because I want this to be genuine for you guys when I say this. I really have intended, and I've said this to you, I've been transparent, that I want this group to be small, and I want us to be able to get to know each other. I want to know each other's names, know about each other's history and likes and hobbies and things like that. But most importantly, I want, if during the trading day you got a question, that you're not just looking at some text or email that I sent out. You're actually able to talk to me throughout the day in a live manner, okay? And I don't know what that number is. I believe, just based on my past experience, and as I've mentioned to you guys, I think that number is 80. I think that we can handle 80 people in this program and still keep it personalized, still keep the value quotient high, okay? I don't know. We'll see how time goes. That number may be a lot higher than that. It might be a lot lower than that. I don't know, but I want that personalized nature. And the reason that I just stress my background is because you guys know, if you know me, I could have easily done this program through Paradigm Press and very easily put 5,000 people into this program. I mean, with a drop of the hat, we can put 5,000 people into this program at a lot higher cost than $168 a month, okay? That was never my goal with this program. That's not what I'm trying to achieve with this program. I want it to stay personalized. And so the reason that I mentioned this is that our group size, I initially asked for a beta group of 10 individuals. We now have 65 people in the private Facebook group and 74 people in the live chat. Now, I'm going to tell you right now that number is going to come down dramatically, okay? Number one, a good tell is that we have 74 people in the live chat, but only 65 in the Facebook group. Why is that? Well, you don't have to right now, the way our live chat is set up, you just get the URL and you sign in. So there's no permissioning involved. I have to accept your invitation, your request, to get into the Facebook group. So we've got, 9 people in our chat room that probably have no intention of doing anything with this program. They just want to glom on to get anything out of us that they can, okay? So a couple things. Number one, October 9th through the 11th, when we kick in the pay system, when we allow you guys to sign up officially for this, put in your credit card, pay your $168, I think right there you're going to see a big fall off in the numbers that we have. And number two, I think probably 30 days from then, a month down the road, you're going to have, it's just the nature of any system, you're going to have a bunch of people that say, wow, I didn't know that this was so intensive. I didn't know that this was so time consuming. I got into this not even knowing what it was about. This isn't how I like to trade. This isn't what I'm looking for. Whatever. But you're going to have an additional fallout probably 30 days from now. So I was initially very concerned about how many people we were getting into this. I'm not so concerned now. I do think that we're going to have 2 big waves of fall off here, and we'll push those numbers down. But I wanted to just get this to you guys, and I wanted to just quickly also talk about the importance, once again, of risk management, guys. This risk-reward ratio, win-loss percentage. How much money are you risking versus what potential reward you have? And then what are your probabilities of success? How often are you winning, okay? I love this saying, you can make money, you can make excuses, but you can't do both. As a trader, the buck stops with us. There's no one else. So we are in control, okay? I hear stuff all the time. Oh, I lost all this money. Why? What happened? Well, I was in this program and I was following their trades and they didn't have a good stop loss, or the market went crazy, or something happened that I wasn't aware of, or whatever, right? Guys, let's be very brutally honest here. That's all BS. That's all BS. This is your money. This is nobody else's money but your own. And the buck stops with you. The buck stops with me in my own account. We control. The market does not control what happens to our trades. We do, okay? We get to decide what that risk is in that trade. Now, I don't know for you if it's 3-to-1, if it's 2-to-1, if it's 1-to-1. And I want to talk about that real briefly, okay? How do we decide where to put those trades up? Well, let's just think about this for a quick second. Let's say that we are trading an 80% system, okay? That's usually where I put my wings, and it tends to work out about 8 out of every 10 times. And let's just say that we're earning $1,000 every time we're right, okay? So if that works 8 times, you know, that means that I'm going to make $8,000 on that trade. And I could, with those two losers, I could afford a 3 times loss, couldn't I? Because I'm going to be losing $6,000, $3,000 each time. If my profit potential is 1,000, I'm going to risk 3 times that, so that's 3,000. 2 of those losses at 3 times, that equals a $6,000 loss. I'm still profitable, right? I'm up $2,000. Now let's say that this is over 10 trades. I do 10 trades, 2 are losers, 8 are winners. Let's say this is over a 1-month period of time. I'm trading 10K. You made $2,000 on 10K. That's 20% a month. Guys, that's what we're shooting for, isn't it? 240% a year. So that program works. It works. But what if we say, listen, I can't take that risk. I cannot take that kind of risk, okay? Well, do you guys understand? Does this make sense that if I say, listen, I want to trade a system that has way less risk. Okay, what that means, it doesn't mean that we're going to increase our probabilities of success. It means we're going to lower them. We're going to lower them. Your probabilities of success are probably going to be like 60% now. Why? Why would your success rate go down on a safer system? Well, because you're going to not let losses accrue. The minute losses start to show up, boom, you're out of that trade, right? So what are you doing? You're following my mantra of taking losses often, right? Taking losses often. Now, taking small losses, but yet you're taking losses. So you're going to be taking more frequent losses, but you're not risking 3 times your credit. But how much could you risk then? Well, let's think about it. You got 6 winners, right? Six of them are up and 4 of them are losses going down. Man, guys, you know what? If you're trading 60% because you're taking losses more frequently, really your risk needs to be about 1-to-1, doesn't it? 1-to-1. I mean, you take 6 winners and you bring in $6,000 of income. You take 4 losers and you lose $4,000 of income. You still got that $2,000 profit, right? But look how much tighter that risk-reward ratio is. That's why you're only winning 60% of the time, because you're going to be getting kicked out a lot, right? Which one of these systems is better? Guess what, guys? They both make the same profit, don't they? They both make the same profit, but you're risking a whole lot less here. So the question is this a good system right here? The answer is absolutely yes. Absolutely. But are you mentally capable of doing this? 60%. That means that 4 out of every 10 trades lose. Can you imagine trading a Monday and we lose? Trading a Wednesday and you lose. Trading a Friday and you lose. You stew over the weekend. The next Monday comes around, you lose again. 4 losing trades in a row. Would you have the ability to say, you know what? It's all good. They're very teeny tiny losses. And I know that the laws of probability are going to kick in here. And I'm going to have positive expectancy, and this will work out over time. Okay. So it doesn't mean that one's better or another, but you got to be aware. You got to be aware how much you can risk. Now, here's the numbers. Here's how you figure this out. The risk-reward ratio is just simply the amount of risk you are willing to take for any potential reward. I've talked about anything from a 1-to-1 ratio up to a 3-to-1, right? You risk $3 to make $1. You risk $1 to make $1. Anywhere in there. The win-loss percentage is simply the number of times you actually achieve that result. So is your system a 60% system, a 70% system, an 80% system, right? That's what we're wanting to look at. Now, here's the interesting part of this. The risk-reward ratio and the win-loss percentage are like a little teeter-totter, if you will. The lower your win-loss ratio goes, the higher your risk-reward ratio goes, okay? So let's just take a look, and you guys understand that, if you want to risk if you want to take all kinds of risk, right? Like, let's talk about buying a lottery ticket. Let's look at the lotto, okay? We go buy a lottery ticket. I think we can all agree that that's about as much risk as you can possibly take, right? Incredibly high risk amount with a very low win amount. But why do people do it? If the win ratio on a lotto ticket is so bad, why do people do it? Well, it's because of the reward, right? The payoff is potentially huge. Now, you can flip this around as well. You could go put all of your money in a bank account. The risk is pretty much zero. They're FDIC insured. There's no risk of loss either. You've removed all of the risk, but you're not going to win either, are you? There's no benefit to be had there. So you can flip this however you want. Now, here's the example that I give, and I think you'll understand why it may be better for you, it may be better for us in this program to take lots of small losses often, okay? So let's just say we've got a system. I come to you and I say, listen, I got a trading system. Before I show it to you, let me just tell you the numbers. How would you like the odds of this system if I told you that we're going to lose 99 times out of 100? This system historically has been back tested, and it has been proven that it loses money 99 times out of 100. What would you say? Most people would say, there's the door, buddy. Don't let it hit you on the way out, right? But remember that you can't really answer this question. You don't know really what the answer to that question is if you only know the win-loss ratio. In other words, if you only know how many times we win and how many times we lose. What you need to know is what's on the other end of the teeter-totter, right? Not just your win-loss ratio, but your risk-reward ratio. So what if in this case I said, listen, we're going to put in very, very tight stop losses in this program. Really small stop losses. We're only going to risk $1 of loss in this program. So every time the trade goes against us and we're down $1, our stop loss automatically exits us out of the trade, okay? But the reward, if we're right, is a $500 profit. Now, admittedly, stay with me, admittedly, this is a very extreme example. Hopefully nobody's trading a system like this. Hopefully there's not even one like it that exists. But you guys get the point, right? That we could theoretically trade a system that loses money 99 times out of 100 and get filthy rich off of it if we kept the losses small and the profit was large. In this trading system, obviously, we would lose $99, but we would gain $500. So now the system looks pretty good to you, right? But think about the mentality that you must have to go through loss after loss after loss after loss, okay? So if we want to trade with smaller risk, I know this sounds counterintuitive, but if we want to trade with smaller risk, we're going to take more frequent losses in the program. That's by design, okay? We want to keep the losses small, not have one that ruins us. And the reason why this is something that was really popularized by the billionaire hedge fund guy, George Soros. He said, it's not whether you're right or wrong that's important, but how much money you make when you're right, how much you lose when you're wrong. Because you can be wrong all day long. We can be wrong more than we're right. Some of the most profitable traders in the world, Tudor Jones, a lot of these guys are 35% traders. Almost 7 out of every 10 trades they make are losers. But you know what? They run really tight stop losses. Really tight stop losses. So they're getting kicked out all the time. But man, when the trades work, they more than make up for it. Okay. Peter Lynch, the old dude from the 80s from Wall Street, one of the best mutual fund managers to ever come along, in his book, One Up on Wall Street, said, in this business, you're amazing if you're right 6 out of 10 times. You're never going to be right 9 out of 10 times. Guys, I'm going to tell you right now, listen, don't sign up for the program. Do not sign up for this program if you think that you have stumbled onto some holy grail that is going to ensure that we never, ever have another losing trade. We are purposely going to take losses in this system because we know that if we keep the losses small, it's inconsequential in the big picture. But there are losses. There's no trader in the world that has not had losing trades. It's just the way the cookie crumbles, okay? Most importantly, as you've just learned, it doesn't really matter, right? So 70%, guys, of trading well is just managing your own emotions, controlling that risk-reward ratio, knowing what your win-loss ratio is. That's why that Friday when I lost $5,400, I'm like, you know what? No biggie. I know over the next week, those profits will come back more than that. And sure enough, they did, okay? So successful traders manage their emotions. They allow themselves to take losses and not get freaked out about it because they follow a rule, and that rule is a stop loss. Now, I've had several of you communicate with me and say, hey, on your order page, I didn't see your stop losses in there, or where did you place your stop loss? Or I didn't see in the video where you placed a stop loss, okay? Guys, listen, I don't care if your stop losses are mental or mechanical, but we got to use them. You got to figure out where you put your stop loss. Is it a 1-to-1 or is it a 3-to-1, okay? And Warren Buffett put it best. He says, unlike the Lord, the market does not forgive those who know not what they do. The market can be merciless, guys, if you just let the trade do whatever it's going to do, okay? Almost everybody that I talk to that trades credit spreads with the 0-date expiration strategy and has had a massive loss, and I say, what happened? And they're explaining a situation to me where the market went through both legs. It went through the short leg and the long leg. And I'm like, how did you get there? How did you let that happen? How did it get that bad? Why didn't you do something before then, right? Here's why this is so important. You guys have heard of compound earnings. What about compound losses, right? Did you guys know that if the market drops by 50%, you need 100% gain to make that up? I don't think people realize this. I don't think people understand that if you have a 40% loss, you need a 67% gain to make it up. If you have a 50% loss, you need 100% gain to make that money back. People don't really realize those numbers, right? And just think about it for a minute. Let's say that we buy a stock at 10 and it goes to 5, right? Let's say that it goes to 20. Let's say that it goes to 20. That would be 100% gain. We would obviously love that. But let's say that that 20% stock, that $20 stock now falls by 10. You guys understand now the differences there in those numbers. The same movement is going to be a 50% versus 100% gain. You need twice the gain to make up for half of the loss. So we got to protect the losses, guys. We got to manage that. And psychologically, the thing that's going to hurt us most than anything is ourselves, okay? It is that fear and greed component that we talked about. What's driving you? Is it the fear or is it the greed? So we've just got to set up those limits right up front. Do we accept a one-time loss? You know, I put up $10,000. I bring in a credit of $1,000. Do I exit the trade if I go upside down by $1,000? You know, I probably should, right? I probably should, but you got to have that in and running, whether it's manual, and I do mine manually if I'm sitting in front of the computer, or automated if I'm away from the computer, okay? So I just wanted to share some of those thoughts with you guys. Stop losses are important. We use them. You figure out the level that you want to use it at, okay? Everybody has a different level, whether it's a 1-to-1 ratio or 1-to-3 ratio, but we got to manage it though. So look forward to trading with you guys tomorrow, Monday, and we'll talk to you guys 8:30 a.m. my time, but I'll obviously probably be active on the chat box way earlier than that.